I am back with the second December episode of our weekly Market Insight series, which comes to you directly from the Capital Markets Trading Desk here at SunWest Mortgage Company. It has been a wild week for markets. U.S. stocks struggled to keep the momentum of the November rally and suffered losses for 3 straight days. It was Wall Street's longest losing streak since October. Despite these losses, the 3 major indexes are on pace to finish the fourth quarter and the calendar year with gains. U.S. Treasuries have also had a roller coaster week as the encouraging economic and employment data is showing that the Federal Reserve's tightening economic policy is taking effect. In his last speaking engagement before next week's meetings, Fed Chair Powell signaled that the central bank's officials expect to leave interest rates steady. However, he pushed back against expectations that there will be a rate cut in the first half of 2024. He reiterated that the Fed needs more time to evaluate the economy and that they are still prepared to tighten policy if necessary. Tuesday saw the release of the Jolts job report for the Bureau of Labor Statistics. There were an estimated 8.7 million available jobs in the month of October, well below the 9.4 million that was expected by analysts. It is the lowest number of job openings since March of 2021. The ADP private payrolls report released on Wednesday indicated that companies added 103,000 workers in the month of November, missing the 130,000 estimate. Wages increased by 5.6%, its smallest growth since September 2021. Job changers saw wage increases of 8.3%, making the premium for switching positions the lowest since ADP began tracking the data 3 years ago. U.S. applications for unemployment benefits edged up last week, but continuing jobless claims declined the most since July. Initial jobless claims increased by 1,000 to 220,000 for the week ending December 2nd. Continuing jobless claims decreased by 64,000 to 1.86 million for the week ending November 25th. Despite the decline, though, continuing claims are still high enough to support the growing evidence of a cooling labor market. Nudged by the economic data, mortgage rates continue to decline and have reached their lowest level since July. The decline in rates has helped mortgage applications continue their winning streak. MBA mortgage applications rose 2.8% for the week ending December 2nd. Refinance applications soared by 14% compared to the previous week and were 10% higher from the same time last year. Purchase applications slipped 0.3%. Earlier this week, spot gold prices rose to a record high level above $2,100 per ounce. Gold prices have risen for 2 consecutive months as the Israel-Hamas conflict boosts the demand for the safe haven asset. Analysts expect prices to remain above $2,000 in 2024. In international news, Moody's Investors Services cut China's credit rating from stable to negative. The firm indicated that China's fiscal stimulus to support local governments and collapsing real estate were posing risks to the nation's economy. Meanwhile, in Japan, the country's central bank leaders signaled that they might be preparing to end its long-held negative interest rate policy. And that's all for this week. Please, if you like this content, hit that like button. And to be notified every time we upload a new video, please hit the notification bell to subscribe. Join me again next week for the latest news brought to you by our Capital Markets Trading Desk. And as always, have a fantastic weekend. Buffy out.